Thank you very much. Welcome everybody to the webinar today. I would like to begin by saying thank you. So first things first here. If it weren't for the people that you see on the screen today, I wouldn't be where I am. And I want to start off with Dr. Van Tharp and Dr. Ken Long. The PRX crypto system was born from a combination of Van's beliefs about cryptocurrency and Ken's tactical market framework. I have the belief that my success proves the value of my teacher's teachings, and Van Tharp and Ken Long are my trading teachers. I want to say a thank you to Van and VTI because my participation in the Super Trader program was a profoundly transformative experience for me, both in trading and in life. Van's teachings are what set me on the journey from being a losing trader to a profitable trader. Tharp Think is at the core of everything I do and everything that we'll be talking about in this webinar today. Ken Long, in my opinion, is one of the most brilliant trading minds out there today and an absolute gem of a human being. His coaching, his mentorship, the community of traders that he's created around himself have been absolutely formative for me in my development as a trader. Don Scheid is my dad. He's the first generation in our family to go to college and was doing computerized trading in the mid-'80s. That's around the same time as Ed Seykota and some of the other legendary traders of that era. He successfully accomplished his trading objective. He paid for 2 college educations and did that while working a full-time job, raising a family, and he did it without the benefit of all of the trading education that we have available to us in the trading world today. I also want to say thank you to Mamadi Keita, master drummer from Guinea, West Africa, and Sanji Tom, my Tai Chi master. Both of them exemplified for me what it looks like to live a life focused on building mastery and how to use that in service to others. I also want to say thank you to Jeff Boccaccio, who's my business partner and trading collaborator. He has 20 years of experience in the financial sector. He's on the executive committee of the London Society of Technical Analysts, and he's also the co-founder of the Systems Lab, where he and I build trading systems and analysis tools. As far as the PRX crypto system goes, I created the rule set for this system, and Jeff wrote the code for the indicator and the strategy. You're going to get a chance to meet Jeff in a few minutes because he's going to be presenting part of the webinar that we're doing here today. So consider yourself disclaimed in all the ways listed here, including but not limited to the fact that this is an educational presentation and nothing here is intended for use as a source of advice, investment advice, trading advice, tax advice, or legal advice. Past performance, of course, does not guarantee future results, and especially not when it comes to crypto. Trading definitely involves the loss of risk, and cryptocurrency is especially risky, which takes us right to the next slide. So Van says we don't trade the markets, we trade our beliefs about the markets. So let's start off by talking about beliefs about cryptocurrency. As the creator of the PRX crypto system, co-creator of the PRX crypto system, many of my crypto beliefs come directly from what I learned from Van right here at VTI. And the list that we're going to take a look at here is an overview. It's not an exhaustive list. As anyone who has done Peak 101 or Super Trader knows, writing your beliefs is like peeling the layers of an onion. It just goes on and on. Of course, that's a belief too. So belief number 1, blockchain represents a revolution in technology as significant as the advent of the internet, and it will impact almost everything that we do digitally. Cryptocurrencies represent the opportunity of a lifetime for perhaps the next 3 to 5 years. There are many dangers involved with investing and trading cryptos, and most people are going to lose a lot of money. The dangers include, but are not limited to, legislative risk, psychological risk, so that would be greed, fear of missing out, lack of preparation and training, loss of wallet keys, no risk control, et cetera, et cetera. Another risk is exchange risk, so that would include hacking and exchange bankruptcy. Other risks are market manipulation, tax complexity, And of course, all the things we don't know, we don't know. Final belief here is that all of these beliefs could become instantly irrelevant due to seismic shifts in context as crypto continues to evolve. It's very new, very young, and anything could happen. As an example, if crypto gets outlawed tomorrow, none of the rest of these beliefs will matter. So what I really want to highlight here is that there's a huge opportunity and it's accompanied by great danger. So the PRX crypto system was born from asking ourselves the question, how do we take advantage of this opportunity in a risk managed way? Okay, so we're going to do a poll. I'm interested in your experience around the .com bubble. I am going to paste a link into chat, and I'm going to invite you to click on this link, and you will be able to see the poll questions. And let's just pop over to our poll questions here. So the question is, I was trading during the .com bubble. That's one option, option A. Option B, I know someone who was trading during the .com bubble. Option C, both of the above. And option D, none of the above. So we'll see the results coming online as we go here. So it looks like currently we have a lot of people. I need to look around the corner here. Oh, all right. Yes, there we go. We'll give everyone another minute or two here to see how the results look. Actually, minute or two is a colloquialism. How about we give it about 30 seconds? Let's see. All right. So not so many people trading during the .com bubble. Currently at about 15% there. Let's see, we have 34%. I know someone. Okay. C, both of the above, 21%. Okay. And D, none of the above is 31%. All right. That's pretty good numbers. So here's why I asked you that question. Here's a story of two traders that I know personally who were trading during the .com bubble. Trader A, they didn't participate in the .com bubble because they said, I knew it was a bubble. Now, this trader met their trading objectives in other ways, but they missed out on the opportunity. So how much more could they have made? Trader B did participate, but they lost so much money that they were still recovering when I met them 20 years later. 20 years later, ouch. So we'd like to be Trader C. Trader C uses systems thinking to participate in a professional and risk managed manner to make money and not give it all back. That's the goal of the PRX crypto system as it relates to the belief that cryptocurrency represents both an opportunity and a danger. We want to be Trader C. We want to participate in a professional and risk managed manner to make money and keep it when we're all done. So let's take a look at some of the beliefs behind the PRX crypto system. Again, this is an overview. It's not an exhaustive list. So belief number one, sufficient market information is already included in price. Because of that, it's possible to trade crypto with minimal fundamental information about specific coins and or blockchain technology in general. One of the perceived barriers to entry in trading crypto is the belief that blockchain technology is too complex to understand and that there are too many coins, we can never wrap our brains around all of them. As we'll see today, it's possible to achieve excellent results just by looking at crypto price action. Now, we're not saying that fundamental knowledge is not important. We're just saying that in the context of this system, price information is sufficient. As Van said in the Market Wizards book, technical knowledge does not necessarily correlate with trading success. And we believe that the same is true for fundamental knowledge. It does not necessarily correlate with trading success. Belief number two, trends in crypto tend to run further than we might ever expect. So trading with the trend is favorable. As the old saying goes, the trend is our friend. Belief number 3, adapting to changes in volatility is a critical edge. As you likely know, crypto experiences huge swings in volatility. With crypto, even its volatility is volatile. So if we don't have a system that's volatility adaptive, we're sunk from the beginning. The next belief, simplicity is an edge. So simplicity reduces cognitive load, which is one of the major hidden costs of trading. It improves trader efficiency, so less chances of making mistakes. It reduces the degrees of freedom in this system, so that means that there's less chance of data mining, over optimization, etc. And simplicity allows for the possibility of automation, which is a hugely powerful way to further leverage our trading. Markets tend to be fractal in nature. Systems that work on one time frame often work on higher or lower time frames. Flexibility of time frame is what allows us to adapt a system to fit our lifestyle and availability. And as Van continually pointed out, we must trade a system that fits us. Picking a trading instrument that fits us is important to our success. There are a number of instruments that allow a trader to interface with crypto in a way that fits for them. These include ETFs, futures, Bitcoin, altcoins. There's a lot of different vehicles, and this system works on a variety of these. And in this webinar, we're going to take a look at results from a number of different crypto instruments. Next belief, never get into a trade without knowing exactly where you will get out. And similarly, never get out of a trade without knowing exactly where you will get back in. Cut your losses and let your winners run. Cutting losses quickly reduces psychological stress and frees capital for other opportunities. Letting our winners run creates large R multiple winners, which Van loved, and those more than pay for all the small losses along the way. And finally, automation is a powerful way to leverage our trading. It simplifies the trading process, reduces cognitive load, reduces mistakes, reduces burnout. It frees us up to develop more systems. And by doing that, then we can reduce our risk by having a system of systems, a diversity of systems. Now, the PRX crypto system can be traded manually. It doesn't have to be traded on an automated basis, but it can be. In fact, Jeff and I are currently trading a few different flavors of the PRX crypto system both ways, manually and automated. Okay, so at this time, I would like to bring Jeff on. He's here with us today, tuning in from London, and he's going to talk to us a little bit about the edges of the system as well as the indicators involved. So, Jeff, I'll turn it over to you.
Thanks, Bill. Hello, everyone. Nice to see everybody. And thank you for joining us here today. So we wanted to talk about edges, right? Because everyone will often say, you know, what's your edge? And I think the way that we're looking at it is it's not necessarily a what's your edge, it's what are the edges, like plural, of the system here, because, you know, we're trying to build in as much benefits as we can, really. We want to tilt everything our own way as much as we can. So I just wanted to talk through a few of these with you today. And so the first one is flexibility. The idea here really is that we're going to capture opportunities in crypto through a number of different ways. Like, there are a lot of ways that you can participate in crypto. It doesn't have to be in the crypto itself. It could be in ETFs. It could be in altcoins. It could be in futures. And also, you know, we're talking a lot about crypto here today, but the system is not limited to crypto. It's just the origin story, really, of the system was born out of crypto. So it can also be applied to other markets. We've been doing a bunch of testing on our own for other markets and futures and equities and that sort of thing as well. So we're not limited there, but we're just focused there specifically to get us up and running. The next edge is robustness. So here, you know, this is the classic avoiding over optimization, because the future never looks exactly like the past, although it may rhyme, as we know. So we want to make it so that we can capture these outlier moves and not be super constricted and just too sort of curve fit. We want to be robust and able to capture the moves that are going to come in the future. The next one up is simple. So simplicity is sort of at the crux of everything that we're doing. Simple over complicated is one of our sort of our mottos in a way. So we want this to be easy to understand and easy to execute. So leading on from that is having a crystal clear rule set. No matter what the market does, we want to know exactly how we are going to respond. And so that just goes hand in hand with the system. Next one up, low cognitive load. So remember that, cognitive load is one of those most overlooked costs in trading. So, in the trading that we do, like Bill and I, we think of it as system of systems. That's what you've heard Bill say already, and that's really how we think about things. So I think Bill's running something like 7. I'm running, I'm not even sure, something in the 20s. It kind of comes and goes, and that's a combination of systems that are live and in production. There's systems that we're just testing out and they're on small production prototype size, and then there are other systems that are just sort of like in the lab and then in test. But there's always systems going on, and the idea there is that we're diversifying ourselves over a whole bunch of systems which are tackling different markets. So the PRX is one of those systems, and what we wanted to be able to do is really reduce cognitive load, because that's going to allow us to just further diversify and leverage by bringing more and more of these systems online and not being stuck in the doing of the systems that we're currently running. It's what Ken always comes back to as well, right? It's the span of control, right? Span of control is limited, same with the number of systems you can run. So, we want this to be easy to implement and execute. We also try to have a life outside trading. Bill's better at this than I am, but I'm working on it. So, we're going to make money on our trading, but we believe it's wise to ask, how much does all that money cost, right? What does it cost you in other things that you could be doing? And that leads us right into the next one, which is time efficiency. We want an excellent payoff for the amount of time it's going to take to learn the system and to execute it. And then if you move out to the longer time frames, like the swing, which is where the system was actually born from, it was on the swing side. So a swing time frame or weekly, then you're doing even better on the time efficiency. It's going to take very little time to just kind of like follow the system. Also bear in mind that we're automating wherever we can. So if you want to take advantage of the lower time frames, we don't want to be trapped to our screens. So we want to be able to let the computers do their work and then carry on with other tasks, but still get the advantages of the frequency of trading we can get on the lower time frames. All right, the next one is that it does not require an in-depth understanding of the crypto fundamentals or the crypto world, really. We're essentially treating this primarily as a price series. And the reason is the crypto is, very complex, and it's rapidly evolving and changing, and it's difficult to keep up with. And so, we like fundamentals. We believe in fundamental analysis, but, it works best in certain markets and for certain systems. For this one, we're going to leave the fundamentals to the fundamentalists, and we're just going to stick with price. Now, we're not saying they don't work. We're just saying that we don't necessarily need them in order to run the system as we've designed it here. Okay. Also, this means that, we're making crypto trading accessible to people that don't want to become crypto experts, right? It's, you don't need to go down the rabbit hole of crypto in order to figure out how to run this. And what that means is that we can interface with like the altcoins, and there are there are many altcoins coming all the time. I think a colleague of mine quoted something, it was in the thousands of altcoins that are currently existing. We've tested with a lot, but there are going to be new altcoins, and there are opportunities there, and of course there are risks there, as Bill said before. So we want to be able to take advantage of these without understanding the fundamentals, and then we don't want to have the cognitive load that goes with trying to understand what all of these altcoins are doing. So yeah, today's fundamentals may be irrelevant tomorrow anyway. So we just want to be able to take advantage of the markets. All right, next up is fractal. And what we mean by that is simply that the system can be traded intraday, swing, weekly, or really sort of any combination thereof. And we've done a bunch of testing on lots of different time frames there. Next up on the edges is volatility adaptive. And really that's thanks to the math behind the indicators we're using and the way we apply them to the system rule set. So we want to adapt to volatility because, you guys are aware that the crypto markets can be pretty volatile. And essentially what we do is just normalize our risk and then size it down when the volatility is very high. Now, one of my favorite edges here is the large R multiples that are possible. So, we've had 20 to 25 R is quite probable. 60 to 80 R is not impossible on these. The idea here is to catch these large trends and to try to do our best to just stick with them and let them unfold. Okay, so next up is a unique view on price action. So not many people are looking at the market in this way. So therefore, that's an edge for us, right? Which leads us right into the fact that it's statistics based. So, we are big learners from Ken Long. He is one of our foremost mentors. And so there's a lot of Ken Long in these systems, and there's a lot of statistics when Ken Long is talking. And so, think like the house, put statistics and long-term probability on your side. All right, so next one is it trades crypto, which is an edge in itself. Bill talked about a few of those earlier, right? And specifically, like we're trying to apply this to the amount of volatility available. We want to take advantage of the volatility. That's why we focused on this market in the first place. Also, it's a new and still inefficient market, and that's an opportunity, right? Especially when you go into some of the large trends that unfold here. So that inefficiency essentially means that the market is, immature and can offer some of these outsized rewards and big swings in price. All right, and the next one there, we've only got a few more, don't worry, is ruthless risk management, right? So the goal here is to survive that worst case scenario in the short term so you can live to achieve that long-term expectancy. And there are a number of ways the system manages these risks. So a few examples are, so the system never gets into a position without knowing where it's going to get out. The system uses an I-stop immediately. And so we know our I-stop is in there, and that's the volatility adaptive piece. And we're also using a trailing mechanism, which reduces risk continually as we're in the trade and also cuts trades that just aren't working out. And then, one of the ones that we're really excited about is that it can be fully automated as well. So that automation is leveraged, like Bill said, and it means that we can get on with other things and we can run lots of different flavors of the system on many different markets. And finally, the last one is we've got a custom built indicator and strategy that we've done for the system for us. So, it's we're going to be making this available. It's low cost. It's easy to use. It works on mobile devices. It's specific to the system, and it further reduces that cognitive load because it's just taking the work out for you. All right, so those are all of the edges that we are excited about and try to bake into that. So you wrap all that together, and we've got hopefully a lot of edge on our side, right? So next up really is just talking through what is PRX, right? PRX kind of sounds like a funny acronym for something, and of course it is. So what it stands for, the P is for the PSAR, right? That's the parabolic stop and reverse, if you guys aren't familiar. The R is for regression lines. So Ken Long, again, is very big into regression lines. And then the X is a flip or a cross. So we're looking at when the regression lines are crossing the PSAR. And so this has to do with the indicators we're using in the system, of course, and we're using really just 3 indicators on this. So, remember, one of the beliefs was that simplicity is an edge, and this is where it comes down to in the system itself as well. And we'll take a closer look at these on the next slide here. All right, so the 3 indicators that we're going to use. I'll go through this quick because you guys are probably familiar. But so PSAR first, the parabolic stop and reverse. This is Wells Wilder's indicator. He was the father of a bunch of other well-known indicators like ATR and RSI. And you guys probably know it. You can see it on the slide there. It'll appear as sort of a series of dots, either above or below price. And the idea is that it's an identification of trends. So we're either going up or we're going down, and there's no real in between. And so you can see the PSAR on the slide there. And the system, it serves as a trend indicator, an indication of reversal, and it's also where we place our stops. From a functional perspective, it also relates to the edges of the system. So the PSAR is what helps us cut those losses quickly, let the winners run, and then be volatility adaptive. All right, so the next one was the regression line, if you guys recall. And so this is like the mathematical best fit line for a set of data. So, in trading, it's the line that best fits like the price over a given period. And we're using the moving linear regression line. Sometimes it's called the linear regression curve. It's also the least squares moving average. Ken Long really kind of pioneered the idea for us. And it's the blue line on the chart that you're seeing there today. And so from a functional perspective, we're using these RLs as a smooth version of price. So there's a lot of noise in crypto, and it helps to be able to smooth that out. And so we're using the RLs as a way to just kind of like remove some of that noise and keep us in these trends. And so, Bill's been in trades with this PRX system on the altcoins where, the price can go up like 60% in the first 24 hours. So it's just some of these are fairly crazy volatility, right? So with these huge bars, it can get confusing and noisy, and it just gives us a way to follow price without trying to find price within these large bars that can appear. So the RL gives us a statistically based way to filter out the noise and assess where price is now, according to that mathematical best fit line. And we're using a little tweak on that PSAR where we're using the RL as an input to that, which allows us to stick in these trends that bit longer. Okay, now the final one is the simplest one of all, and this is just a moving average as a market filter to gauge that long-term trend, right? We want to be going in the direction of the long-term trend. And if the trend is against us, and you guys are probably seeing with crypto, it's been an interesting year. And so if it's against us, we don't want to be fighting that. So we want to have a long-term market filter there. And again, this kind of comes back to Ken, right? Just using moving averages. With all the academic literature that's gone along with these long-term averages in the past. So it's just an SMA, a simple moving average market filter. Remember that tale of two traders that Bill was talking about a minute ago, and the hypothesis of the system. We want to avail ourselves of the opportunity while minimizing those dangers. And this is one of the ways that we do that. So if trader B had one of these market filters, they probably would not have lost all the money they lost trying to get long after that bubble had popped. And I think that is all that I'm going to cover here today. I'm going to go ahead and hand it back over to Bill now, and he'll take you through a few other ideas.
Thanks, Jeff. So speaking of Trader B and the dot-com bubble, here's a thought experiment. So what if crypto was a bubble and now the party's over? One of the many possible future outcomes for crypto is that going forward, it behaves like the NASDAQ after the dot-com bubble. The internet didn't go away, it just got integrated into society. And QQQ is still generally more volatile than SPY, but not like it was before the dot-com bubble peaked on March 24th of 2000. So what if you had terrible luck and you started trading the PRX crypto system on the NASDAQ on March 24th of 2000, exactly on the day of the peak? And what if you had a belief similar to my belief about crypto, that there's an opportunity of a lifetime for the next 3 to 5 years So you traded this system for the next 4 calendar years. So here are the results of the PRX crypto rule set as back tested on QQQ from March 24th, 2000, the very top of the bubble, to March 24th, 2004. And this is using the PRX crypto strategy that we've coded for TradingView. So the net result is minus 2.39R over 16 trades with a maximum drawdown of 2.92R. In the meantime, QQQ had a buy and hold return of minus 70.9%. I heard Van or Ken say once that they have a belief that when an excellent system encounters adverse market conditions, it doesn't instantly become a terrible system. In times of adverse market conditions, a good system will go sideways to slightly down. So to only lose 2.39R trying to get long the NASDAQ for 4 years, starting on the day the bubble popped, for me, according to Van and Ken's belief, that tells me that this is an excellent system. So let's take a look at some results. What we're going to do next is to look at the results from 4 different flavors of the PRX crypto system. So we have the PRX crypto ETF swing system. We have the PRX altcoin swing system. We have the PRX intraday system, and we have the PRX weekly system. So the first PRX crypto system we're going to look at is the very first one that we developed and traded, and that's the PRX crypto ETF system. So let's take a look at some results here. So this system trades on a swing basis using the crypto ETFs GBTC, which tracks Bitcoin, and ETHE, which tracks Ethereum. So here's a back test that's generated by the PRX crypto strategy on TradingView. This is from 2016, so it includes the big run up and the crash in 2017, and it goes all the way to the end of 2021. The reliability or the win rate is 50%, and the win-loss ratio is 5.2 to 1. I like to highlight this because I think of Ken Long's coin flip analogy. So here we've got a coin toss, and it costs us $1 when we lose, and it pays $5.21 when we win. So how long do we want to play that coin toss for? All day, every day, please, for me, and thank you. So for this flavor of the system, we have an expectancy of 1.29 and an SQN of 3.18, which by Van's definition is an excellent system. The maximum loss here is minus 1.32R. It's not minus 1.00 because we do have adverse gaps. We are holding these ETFs overnight. It is a swing system. So when we look at our multiple histogram, we have fairly tightly capped losses on the left side with big R winners, which gives us fat tails out to the right. Also, I'll just point out here that this histogram doesn't include the 24R win that appears in the trade sequence plot. And that's because when I built this Excel spreadsheet, I didn't know we were going to have such large winners. So as far as our cumulative R curve, the blue line is the cumulative R, while the red line is the 10-period moving average, the yellow is the 20, and the green is the 30. Jeff and I have those built in because we've done a lot of research on other systems where moving average crosses are actually a real thing of beauty. It's a lot of gold in that mine there. Note here too that the average hold time for winning trades is 30 days, and the average hold time for losing trades is 10 days. So going back to what we covered earlier, we let our winners run and we cut our losers quickly. Not only does that align with Tharp think, but it's also capital efficient and it's emotionally efficient, right? We take our losses quickly. We don't stay up all night, every night, worrying for weeks or for months. The next system that we're going to take a look at is the PRX altcoin swing system. So this system also trades on a swing basis. And here we're using a basket of altcoins, all of which are denominated in USD. Results we're looking at are from a manual backtest from May of 2020 to May of 2021. The reliability or win rate is 49% with a 4.17 to 1 win-loss ratio. So again, we have that excellent Ken Long coin toss there. The system returned 110R in a year with an expectancy of 0.96. Here we have an SQN of 3.53, which by Van's definition is an excellent system. Note also here that the histogram doesn't include the 10R win nor the 15R win that you see in the trade sequence plot. And again, on the QMR curve, the blue line is the cumulative R. The red, yellow, and green are the 10, 20, and 30 period moving averages respectively. Now, while we're talking about altcoins, let's talk about Luna. One of Van's beliefs was that some coins will go to zero. And as you remember, that happened with Luna in a very dramatic, very public way in May of 2022. I was trading the PRX altcoin system at that time. And because Luna was a potential target for this system, I want to take a look at what happened. So first of all, in May of 2022, our moving average filter was indicating that market conditions were unfavorable. So at that time, Luna was not a qualified target. So I did not take any trades in Luna in the months leading up to it going to zero. So our market filter did its job. It kept us out of trouble. I have a belief that outside of exogenous circumstances, markets don't go from great to catastrophe overnight. Things are usually going down for a while before they crash really hard. An example of that would be the financial crisis of 2008. You probably remember the markets had been going down for a while before they fell off the cliff in October of that year. In this example, Bitcoin and most of crypto had been under pressure for some months before Luna blew up. And our moving average filter caught that and kept us safely on the sidelines. But let's say someone chose to ignore the market filter and trade Luna anyway. This chart shows the entries and exits generated by the PRX strategy, assuming that this trader ignored the market filter. So we have 3 wins, we have 2 losses, a net of minus 0.13R. So basically scratch, fractional loss, minus 0.13. So even if this trader had chosen to ignore the market filter rule, the tactical rules related to the RL and the PSAR would have kept this person out of trouble. I personally find this example to be very reassuring. And of course, as a disclaimer, that doesn't mean that trading crypto isn't still dangerous. So let's switch gears again. And we're going to look at some backtest results for the PRX intraday system. These results were also generated by the PRX crypto strategy on TradingView. And these are using Bitcoin perpetual futures on Kraken. Now, that's not a recommendation for those futures or for this exchange. We are presenting this only for education and illustrative purposes. On this chart, we have a variety of timeframes and moving average filters, although I have grayed out the moving average filters so we don't give away too much of the secret sauce. That wouldn't be fair to the people who are going to pay for the PRX crypto workshop in 2 weeks. So looking at the data, the first 5 rows in light blue are for 60-minute bars. Each row is a different moving average filter. And then moving across the columns, we have our net R, our total trades, reliability, profit factor, and expectancy in R. Going down the table, that same idea is repeated for each color-coded group of 5 rows, with the timeframes going from 30 minutes all the way down to 5 minutes. A few things you'll notice here. First of all, the results are solid across the board, which tells us the system is robust. For Jeff and I as system researchers, if we see the opposite of this, in other words, if we see only one small area of goodness and everything else doesn't have good results, then that tells us that's probably a function of curve fitting, over optimization, data mining, something like that, or it's probably just luck. We're not seeing that here. We're seeing the opposite. We're seeing robustness, which we interpret as a very good sign for the overall idea, the overall hypothesis behind the system. You'll also notice that, as we would expect, the number of trades increases as we decrease the time frame and decrease the length of the moving average filter. The reliability, interestingly enough, stays fairly stable around approximately 31 to 35%, regardless of the configuration. So this is a trend following system. And like many trend following systems, the win rate tends to be lower and the win-loss ratio tends to be higher. As Ken Long, very astutely pointed out in one of his essays on trading, retail trading tends to attract professionals from medicine, law, architecture, et cetera, et cetera. In those fields, you get paid to be right. So if you're going to trade this system, you have to be okay with only being right 30 to 40% of the time. So as Ken says, it's okay to be wrong, but we just don't stay wrong for long. Then we wait for the times we're right, and when we're right big. In this data, you'll notice that the net R gain ranges from 125 R to 1,190 R. So that's the kind of being wrong that I could really enjoy. So as a general trend, you'll also notice the expectancy increases as we move towards higher timeframes, and the net R increases as we move towards lower timeframes. And I will say this, while the net R numbers at the bottom look really good, I'll point out that these numbers do not include slippage or commissions. And from our research, we know that systems with a low expectancy can lose a material amount or all of their edge once we add in execution cost and slippage. So when we're considering which flavor of the PRX crypto system we might want to trade, we want to find a balance, in our view, between opportunity and expectancy, while also looking to reduce slippage and commissions as much as possible. And actually, we're going to talk about strategies for reducing slippage and commissions in the coming PRX crypto workshop. Now, you might be thinking, okay, this looks good for Bitcoin futures, but I live in a place where I can't trade those. So let's look at intraday results for some other crypto instruments. On this table, each color-coded group of 4 rows is organized by symbol. So we have spot price for Bitcoin, spot price for Ethereum, and Ethereum Classic. We have GBTC and ETHE, the crypto ETFs. And then we have 2 very popular altcoins, which you've probably heard of, Ripple and Solana. For each symbol, we have 4 intervals. We have 60 minutes, 10, 5, and 2. We're using the same moving average filter length for all this data. And again, I've got that grayed out here. So a few things you'll notice in these data. Again, the results are solid across the board with only one exception, which is Bitcoin on the 2-minute charts. So again, that tells us the system is robust. And again, as a general trend, the expectancy increases as we move toward higher timeframes, and net R increases as we move towards lower timeframes. Here too, while the net R numbers on the very low timeframes look really good, again, these numbers don't include slippage or commissions, and we know that could have a big impact on systems with very low expectancy. Another thing you'll notice, and it's the main takeaway from all of the results we're looking at, is that there are a very large number of permutations of this system that we can choose to trade. The options include a variety of trading instruments, timeframes, regression line length, moving average length, and all of these are customizable in the PRX indicator and automated strategy. So we've purposely developed this system so it's very easy to trade a flavor or flavors that fit you. Right? We don't have to choose just one. Life is good. Jeff and I are currently prototyping 4 different flavors of the intraday system on an automated basis. And by prototyping, I mean, we're trading in real time with real dollars, but at a very reduced size. And I'm currently trading 2 different flavors of the swing system on a manual basis at production level. And by production level, I mean trading in real time with real dollars and at full size, given the position sizing algorithm that I chose for those systems. So we have a lot of options, a lot of ways to make the system fit us as individual traders. These are the backtest results for one of my favorite flavors of the PRX intraday system. This is one of the ones that I'm prototyping on an automated basis right now. This flavor of the PRX system trades Ethereum on a 30-minute time frame. This is a backtest, again, using the PRX crypto strategy on TradingView from January 1 of 2020 through August 1 of 2022, not including slippage and commissions. So we have 941 trades. We have 36% reliability with a win-loss ratio of 2.44. Net R gain is 139.7 R. So here again, we see a low win rate, but a high net R. I'm really getting into this whole being wrong thing. Expectancy is 0.14. SQN is 3.0. Hume R curve is up and to the right. Average hold time for winning trades, 9 hours. Average hold time for losing trades, 3 hours. And we have a maximum drawdown of 21.8 R with maximum consecutive losses of 16. So I want to point out that with a system with a win rate of 36%, a maximum consecutive loss streak of 16 is going to happen. We just have to know that upfront if we're going to be able to trade a system like this. And that's common for trend following systems. So if we're going to choose to trade it, we don't get to be surprised when that happens. Also, you'll notice in these data, while the SQN 100 is quite low, the SQN-N is quite high. What's the difference between the two? Well, to zoom out a level, remember that SQN is one measure of system performance. It's not the only measure of system performance, but what does it measure? So it tells us how easy it will be to meet our objectives using position sizing. The difference is that SQN 100 does not factor in expectunity. It's standardized for 100 trades, so it doesn't take into account if the system gives us a large number of trading opportunities. SQN-N does factor in expectunity, so it takes into account if the system gives us a large number of opportunities to trade. For me personally, as a trader and as a systems researcher, I tend to look at SQN 100 for swing timeframes and higher, and SQN-N for intraday systems. I personally find that a useful way to apply these performance measures. So the low SQN 100 in these data is saying that it would be difficult to meet our objectives by cranking up our position size. But with 139R, do we really need to do that? No, we don't, because the high expectunity will take care of that for us. And just one other point about these data here, you'll notice that the annualized R gain we have here doesn't work out if you multiply it over the number of years we've gotten this backtest. The reason is that I originally built this Excel spreadsheet for trading stocks. So the spreadsheet calculates annualized R using a market that's only open 9:30 to 4, Monday to Friday, and closed on federal holidays. As you know, crypto trades 24/7 through 65. So the annualized R gain here is very understated, but I left it like this for informational purposes in case someone only wanted to trade this system during regular stock market hours. This could be an interesting approximation of what annualized R gain maybe could look like pending your own further research. So let's take a look at the results for the PRX weekly system. This version of the system is most flexible in terms of traders who don't want to trade swing or intraday, and it offers a very high payoff per unit of time needed to execute. So it allows for longer term risk managed exposure to crypto without the drawdowns that are associated with buy and hold. What we have here is a backtest of Bitcoin using data from Bitstamp as generated by the PRX strategy. And again, that's not a recommendation or an endorsement of either Bitcoin or Bitstamp. First of all, looking at the data, we have to note that this is a small number of total trades. That's as we would expect since we're looking at weekly bars. So that means we have to take these numbers with a grain of salt since 11 is not a statistically significant sample size. That said, the reliability or win rate is 73% with a 4.45 to 1 win-loss ratio. That is a fantastic coin toss. The coin is rigged in our favor and we get a really big win to loss ratio. For those who like to look at profit factor, 11.86 is absolutely astronomical. In my research, I don't believe I've ever seen a profit factor as high as this for PRX crypto systems or any other system that I've researched. Here we have an expectancy of 2.26 and an SQN of 6.37, which by Van's definition is a superb system, and he says few exist. Average hold time for winning trades, 4 months. Average hold time for losing trades, 23 days. And the maximum drawdown in this back test was 1.11 R. As a tip for future research, for those who are going to take the PRX workshop and get the PRX strategy software, if you like these numbers, I suggest researching what it looks like with a 50-period moving average filter. And just as a spoiler alert, the net R jumps from 24 to 63, and the expectancy jumps from 2.26, which is already very high, to 5.31, which is stupid high. Of course, you could also research other coins besides Bitcoin. It's very easy to do that with the PRX strategy, and you could even research a basket of coins if you wanted to. Alternatively, as another idea, for those who like the idea of buy and hold with crypto, you could use this system as an entry signal generator for when you would want to accumulate positions. Okay, so for those who want to learn more about the PRX crypto system, we'll be teaching a workshop on Saturday, November 12th from 9:30 a.m. to 5:30 p.m. Eastern Time via Zoom. The cost is $9.95 for the first 20 registrants and $13.95 for everyone thereafter. You can register by visiting the VTI website at www.vantharp.com. As a quick overview, at the end of the class, you will be able to understand how to successfully trade the PRX crypto system in a professional and risk-managed manner using a variety of timeframes and crypto instruments. Professional is defined as all of these excellent things here, and risk managed is defined as all of these excellent things here. We are at 52 minutes into our presentation here. So Jeff and I would like to finish with question and answer. And so for this, we're going to have Jeff come back on. If you have any questions, we'll invite you to type those into the chat and we will answer questions. Ken Long is on the call. Thank you, Ken, for being here. Ken put in a note, the 30-minute hybrid time frame is proving to be a real secret sauce, being positioned between traditional intraday trading on faster time frames and daily charts for traditional swing trading. Very manageable time frame. Absolutely, Ken, couldn't agree more. And actually, it's kudos to you that we even researched the system on the 30-minute time frame. So thank you again. One of the things, if you've ever studied with Ken Long, I love studying with him because he'll open his mouth and a piece of gold will just fall out and roll across the floor, and it's yours to pick up and gather. So the 30-minute time frame, that comes directly from Ken. Thank you, Ken. Pierre asks, is the system trading long only or long/short? Jeff, do you want to take that one?
Yeah, so I answered this in the chat just as you were finishing off that last section there, and the quick answer is that it is the results that we're looking at here are based on long only, and the reasons for that are US-based crypto regulation. So remember that we initially kicked this off based off of some of the work Bill was doing, and in the US, they're quite strict still, but in other parts of the world, there are a bunch of other options, including shorts. So shorts are available, but we wanted to show what was possible with with everybody. And so we've been doing some testing on the short side as well, and we found some pretty nice looking results on the short side. So yeah, we are not restricted, yeah, both sides can work quite well.
Yeah, thanks, Jeff. And one of the things I just want to highlight is in our trading, Jeff and I consider ourselves as trading researchers, and the research is never done. So the short side is currently under development. Mary Jane asks, which do you trade, stocks, ETFs, options, or futures? Mary Jane, I am personally trading crypto ETFs. I'm also trading cryptocurrencies on cryptocurrency exchanges. Jeff, how about you?
Yeah, and so to be super clear on that, Bill is trading the currency essentially directly, so holding the currency. And I am doing the same, but doing it via the perpetual futures contracts that are available to some people. And since I'm in Europe, I'm here in the UK, and that's one of the options available to me. And so that offers some interesting things with extra leverage, longs and shorts. Yeah, so we're kind of covering a lot of the different angles, I think.
Yeah, absolutely. One of the things that Jeff and I are doing in our research is trading this thing as broadly as well as deeply as we can to really take advantage of the opportunities that are out there and add to our research base, the basic knowledge that we have about system performance and how the system performs on different time frames and different instruments. Eric asked, what minimum size stake should someone have? Jeff, do you want to answer that one?
Sure. Yeah. One of the nice things about crypto is the extra flexibility on sizing. So you guys you may be familiar with fractional sizing on stocks, and there's definitely fractional sizing on crypto available depending on the way that you trade it. So it could be as low as, like, we've been trying some of our prototype testing on, with risk as low as $1 a trade, and you can actually do that. So that's pretty cool to do and just kind of get your feet wet. So I like the idea of being able to go really small, but also being able to go quite large. And so on the other side of that, if you wanted to trade on the larger sides, the actual exchange listed crypto based on like the CME exchanges, like on the actual US futures markets, those are also available. But those are in bigger chunks of size. I think the original was 5 Bitcoin, like if we were talking Bitcoin. And that got a little bit pricey when Bitcoin was trading at around 60 grand each, right? But they now have mini and nano futures, I think, as well, or maybe they're micros. But there's a bunch of options even on the standard US futures exchanges that you guys might be familiar with.
Thanks, Jeff. Great answer. I think we have time for one more. We have Doug here. Doug Rutherford, thanks for the question. Doug, he says, can you please elaborate on the degree of automation you have applied and what you see as the potential automation? Jeff's the most qualified person, so I'll go ahead and answer that one. So, Doug, to answer your question, so degree of automation, I'm gonna guess that you mean like how automated is it? So the automated strategy that we're currently prototyping is 100% automated. In fact, the two systems that I'm prototyping right now have been trading while I've been sitting here doing this webinar with you. So it's 100% completely automated. Now, that doesn't mean you should trade it without supervision, but you do not have to be making decisions as the trading is happening. So the position sizing is built in, et cetera, et cetera. What do we see as the potential automation? Well, I mean, the idea for us is to have the system be able to be operating on that fully automated basis. And like I said, we're currently prototyping that. And the idea is to eventually be able to, in the very, very near future, to be able to make that automation available to everyone. Currently, the indicator is available and the strategy is available. So you can have the indicator up on your charts if you want to do everything manually. The strategy allows you to back test it. And then we're also building hooks into the strategy that would allow you to trade it on a fully automated basis. And that's actually been our biggest priority, the thing that we're working on the hardest to get that up and running and available to anyone who wants to trade it. Jeff, since you're the most qualified person to answer that question, do you want to add anything to what I just said?
No, I think you covered it. And the nice part about it is that, we wanted to make automation available, but it's also not required, right? I mean, when you first started trading the system, you were trading it on swing. It was very manageable to be able to, just kind of follow along with that on a day-by-day basis, bearing in mind that you need to pay attention on the weekends, right, with crypto, because it's a 24/7 market. But the point being is that, you can run it systematically and mechanically but doing that, just manually. And so it kind of comes down to, what works best for you. But we wanted the automation to be available because it really kind of opens up a lot of extra opportunity.
Yeah. Thanks, Jeff. Great answer. Good news, you all. I'm actually broadcasting here from the Van Tharp Institute, and we have RJ in the room, and he says we can keep going. We don't need to stop at 1 p.m. So if you do need to go, thank you very much for coming. If you don't need to go, we'll stay here and answer some more questions. David asks, do you provide the chart parameters plugins for TDA? David, in the workshop next 2 weeks from now, I almost said next weekend, 2 weekends from now, November 12th, we give all of the information, all the parameters, all the settings, everything you need to build the indicators yourself. So of course we have them available for subscription if you want them, but we know that traders are very independent crowds, Jeff and I being two examples of that. So when you come to the workshop, you will leave with everything you need to go home and build the indicators with all the parameters, everything that you need. The part about plugins for TDA, I'm gonna have to turn that one to Jeff. Jeff, do you want to shed any more color on that?
Yeah, I think all I'll say at the moment really is that we haven't built it for TDA specifically. It doesn't mean that we won't or that we can't. And if that's something that maybe if somebody isn't familiar or comfortable doing that, then if there are platforms that people are using that they'd love this to be available on, then we're happy to look into making some of the indicators and backtest strategies available on those platforms too. So far, we're going to focus on TradingView because it gives us a lot of flexibility. And yeah, I think that probably covers it. We've been doing our own sort of internal testing with TradeStation and multi-charts as well. So it's not limited to any particular platform.
Yeah, absolutely. And I just want to highlight one of the reasons we chose TradingView is because it's so easy to use and it works great on mobile devices. So remember, one of the ideas that Jeff and I have is we want to have a life as well as being traders, right? We don't want to live to trade, we want to trade to live. And so, for example, here is on my phone, I have the TradingView charts. This is actually Ken Long's RLFF, regression line fractal framework. Jeff coded this and it's available right now at our factory for TradingView. And of course, we also have the PRX strategy and indicator, which also runs on mobile. So there have been times where I've just been too lazy to walk downstairs and get in front of my computer. So I just do it from my phone. Or I was at the beach a few weeks ago and I didn't really want to get off the beach and go inside to place orders. So no worries, I can just check the charts right here from my phone. Also, as Ken says, it should be easy to put everything in TC2000 or TradeStation, et cetera, whatever you like. This system, like we said, is simple. So if you are good at coding, you should be able to do that. Pierre asks, is it possible to automate execution with TradingView? Yes, Pierre, it is, in fact, and that's how we're running the automation now. We're running it through TradingView. Jeff, do you want to add any color to that?
The only color I think I'll add is that, so if you guys are familiar with TradingView, out of the box automation is not supported like directly from TradingView, but we're using a few third-party tools which do all the plumbing for us and get everything connected up. So, but yeah, it's been working quite well for Bill and I. And if I can go in and I just noticed Orsini's put a chat in there. So TradingView, 3 indicators needed only, and yeah, it's the indicators that we talked through today, right? And so we could talk through them, and we'll talk through them in more detail and how we're putting them to use to create the system as a whole in the workshop itself.
Excellent. Yeah, one of the things that I love is just 3 indicators. I can't believe how well it works. In fact, yeah. I remember the night that I started researching this. I went down to the office, I pulled up the charts, I pulled up an Excel spreadsheet and started doing manual backtests. And I thought, well, this is an easy idea. It's probably not going to work that well, but let's see. And then I was blown away. I couldn't believe how well these 3 indicators work. But it's not just any three random indicators, right? Remember, we're standing on the shoulders of Ken Long's market framework, his regression line fractal framework. So I can't take credit for thinking up these three indicators. They really come from Ken, and he has decades and decades and decades of experience and is just an absolute trading genius. So yes, it's only three indicators, but it's three Ken Long indicators. So that says a lot. Oh, Bill Long's on here. Thanks, Bill. Thank you. Looking forward to working with you too. Ben asks, do we do auto view alarms from TradingView? Jeff, do you want to take that one?
Yeah, so we're not actually using AutoView. We're familiar with it and doing some testing on that for other markets, but we're using a different platform called Wonder Trading, which makes some of the plumbing available specifically to crypto exchanges, and it's got some benefits over AutoView as well, just in the way that they've implemented the system.
Yeah, and I see Pierre asks a related question here. I hope you will cover the details of plumbing you're using in the back end to automate with TradingView. Yes, we will. And Pierre, just to let you know, again, we're still prototyping that to make sure we work the kinks out. We have everything together legally, blah, 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 insurance-wise, before we set that thing loose for the public. But yes, that is one of the things that we will be sharing with everyone who's interested in learning that. And oh yes, Alvin asked about the recording access. Yes, if you can't be at the workshop on November 12th, you can access the recordings. So in fact, there's 2 or 3 students who have reached out to us so far saying, hey, we can't be there on the day. We'd still like to register. Can we watch the videos? Yes, absolutely. Absolutely, you sure can. And Orsini asks, ongoing support or calls or community available after the workshop? Yes. And that's going to be available 2 different ways. So one way will be that Jeff and I will be posting regular updates, videos, et cetera, a la Ken Long. If you know how prolific Ken Long is with his work, he puts out videos and updates all the time. I'm sure Jeff and I will not be at the same volume that Ken does. If you've never studied with Ken before, one of my favorite jokes, studying with Ken Long is like sticking your face in front of a fire hydrant and screwing the cap off, because he is just so prolific. He's worked so hard and puts out so much amazing material. We'll try to keep up with him, but that's one of the ways, is through regular video updates, et cetera, et cetera. And then we're also going to be offering group coaching. So both of those will be available. Richard asks, do you include methods to determine the market type, or can the system operate in any market type? Jeff, do you want to take that one?
Sure, yeah. So we've essentially, we're using some filtering techniques, those simple SMA-based filtering techniques, to help us define market type. And it's really just when we want to be taking trades and when we don't. So we've taken it in a super simple way. And you know what Bill said earlier, that we are researchers, and the research is never fully done because new ideas come. And I was doing a webinar with some friends of mine over here in the UK last week, and they've built a trend system that they make available for ranking of cryptos as well as ETFs and stuff over here in the UK. And I did some really quick initial testing on that, which is another form of market type. And the results are really good. So we're always checking out some other market type filters that may just be better than the ones we're using. And we'll make those available to you guys if we find things that we think are working better.
And just to tag on to that, Ken Long put in the chat a moment ago, less is more. So the market filter that we use is very, very simple. And using the PRX indicator and strategy, you can actually tweak that filter. So you can say, well, the way that you guys have done it is fine, but I also want to research using this length SMA or that length SMA. So there's quite a lot of customization that's available. And Ken says here, I agree with Jeff and Bill. The favorable markets for these trades to work are embedded in the filters and indicators. At the advanced level, system performance is a form of market condition. See, there it is again. Ken Long opens his mouth and a piece of gold falls out and rolls across the floor. There it is. Exactly. Thank you, Ken. Yeah, absolutely. System performance is a form of market condition. And just to add to Ken's insight there, you'll notice a few minutes ago, I mentioned that Jeff and I have the moving average filters on our QMR curves and the statistics that we look at. And that's one of the ideas that we learned from Ken. Our QMR curve actually can tell us, is this a favorable time to be trading this system or not? Ken says in specialized systems that focus on well-defined targets, you don't want broader market classification fuzzing up the clarity of these systems. Yeah, exactly. And this certainly does qualify as a specialized system that focuses on well-defined targets because we did build this system specifically for crypto. Our other systems, yes, we have more ways of classifying market type, but for crypto, we keep it very simple, exactly for the reason that Ken pointed out here in the chat. We don't want to fuzz up the clarity of the system. Simplicity isn't. Thanks, Ken. Thanks very much. Any other questions?
Just while we wait to see if there are any other questions coming in, just a quick sort of shout out and thank you to Eric and Pierre and Rudiger, if I'm pronouncing the name correctly, who say that they've signed up. We're really excited for all of you guys to be joining us. So yeah, thanks so much for that. And also a shout out to Bill Long, who's been on the chat here and given us some nice comments. Good to see you here, Bill.
Yeah, thank you very much. And also, while we're saying thank you, I want to say thank you to Sarah from VTI, who's been operating all of the dials and knobs here for us on Zoom and has been doing a great job helping with getting people registered and putting the word out in terms of marketing. And also a huge thank you to Kathy and RJ and Kim here at VTI. RJ is here in the room. He helped us do all the technical setup today. So thank you everyone at VTI. Thanks also to all of you on the webinar for coming today. We really appreciate you taking the time out of your day to come and learn about this. And we hope you'll join us on November 12th. And again, to close it, a huge thank you to Ken Long and Van Tharp for being the amazing teachers that they are. Ken, if it wasn't for you and Van, we would not be where we are today. So thank you so much. With that, oh, we have one more question. Adam, are we able to get access to the trading systems without signing up for the next workshop? I can't wait to assist the workshop. Adam, we are teaching the trading system in the workshop right now, and this is the only time that we have scheduled on the calendar for teaching this workshop. So if you want to learn it, the way to do it is to sign up for the VTI workshop on November 12th. All right. Thank you all very much. Hope you have a great rest of your day, and hopefully we'll see you soon. Thank you.
And I'll take my turn to say thank you to Bill and to Jeff for sharing your time with us today. We hope to see you at the workshop, and we hope to see you at our next free webinar. Thanks, everyone.
Thanks. Bye.